Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today we're going to talk about FSLY. We're going to talk about its revenue growth rate and that it's lowered its guidance. We're going to talk about its operating leverage. Then we're going to discuss its net retention rate. Finally, we're going to bring this all together and talk about its valuation and what I would do if I was a shareholder in this stock. So I don't own this stock. I have owned FSLY in the past, but I don't own it right now. But there's a lot here for us to go through. So FSLY comes out and its guidance for the next couple of quarters is significantly lower than analysts were expecting. So you can see here that FSLY was expected to grow kind of close to a mid-30s. You can see kind of edging closer to high 30s CAGR, and they actually said, okay, forget that we in the previous quarter we had raised our guidance on the back of strong results, etc. Things have just gone really sour, and we're not only not going to be able to match that, we're going to really dramatically lower people's expectations because things are just not going our way. Now, this is just I wanted to just point out Cloudflare. So Cloudflare is a stock that everybody loves. People are just going absolutely fanatic about this stock. There's like nothing the company can do wrong.6However, you can see here its gross margins are just so stable. The company is coming up with the company is coming up with the high 70s gross margin and just so consistent. It's just like a line there. And let's compare this with how FSLY is doing. So FSLY's results, it's a business that's very much predisposed to strong operating leverage. So you can see here that coming out at the start of 2020, this company, the growth rate was going really fast and the operating margins were expanding. And now things are slowing down and the operating margins are compressing. So you can see a meaningful amount of compression right here. But what's also very insightful is that the gross margin is mid-50s. I mean, that's not a very compelling business after all. You want to be selecting businesses where, you don't have to necessarily go for something like Cloudflare. There are plenty of other opportunities out there, but you want a business that's quite stable and consistent, and with reasonably high gross margins, because that ultimately will drive your return on invested capital. And you're not seeing that right here. So narrative aside, those two dynamics of the operating leverage and the low gross margins are something that really kind of like jars with me. So what's net retention rate and why does it matter? So net retention rate is the cousin of dollar-based net retention. So the net retention rate is just taking out one cohort year over year to another cohort. So a group of customers last year compared to a group of customers this year. And you can see that the net retention rate has been steadily declining. The trend here is undeniable. And I've gone through and picked out individual marks for each one of the shareholder letters for each one of the periods. I didn't want to just give you the trailing numbers because that would smooth out this. And I just want to really show for each quarter how things are progressing. I don't want to give you the illusion that things are better than they are, because things are really, really rough here. And I just wanted to kind of show this, investing is difficult, and it's much better to just kind of go in with an open mind and say, okay, I thought this, I was wrong, and I think that, or whatever. I've read this book, Super Forecasting, and it just shows that the super forecasters are just human like we are, but they just adjust their forecast over time. And this is what you got to do in investing. You go out with the original hypothesis and you kind of adjust it as new data comes in. So if something disconfirms our original hypothesis, that's more insightful than something that echoes what we already previously felt. Now, a month and a half ago, when I covered FSLY, I said I simply don't have enough conviction FSLY has what it takes to accelerate its revenue growth rates. And I also said, all considered, I believe that there are better investments available elsewhere. So this is not a I told you so moment, but I just wanted to kind of say that there was already kind of question marks lingering here. So it wasn't like I was shocked, and I am shocked to see like how the company has performed and the guidance, but I just wanted to say, okay, there was already question marks in the past. Now, as of right now, even after the sell-off, the stock is priced at 11 times forward sales. So there are many companies out there that are growing at stably at 20% compounded annual growth rates, that are priced at less than 10 times forward sales. So, until the investor sentiment returns to small cap stocks, and many of them return to being priced above 10 times sales, it doesn't leave a lot of opportunity for FSLY to be a compelling investment. So I put a Peter Lynch quote here. So trying to catch the bottom on a falling stock is like trying to catch a falling knife. It's normally a good idea to wait until the knife hits the ground and sticks, then vibrates for a while and settles down before you try to grab it. So, I discussed this with members of Deep Value Returns, and it's just, sometimes a company reports a result and it just takes you by surprise. And the quicker you kind of say, okay, the stock doesn't know I own it. It's not. I'm not in love with the stock. You have to be quite dispassionate when investing. So you don't need to go and play the hero and say, okay, I was invested in this stock and now I'm going to go in and average down. You don't need to do that. The stock doesn't know you own it. There's no attachment there. So you just, if things don't work out, I'm not saying that, this is not advice, I'm not saying that this is what you're going to do, but if things are not working out, you say, okay, this is what I thought, and, it didn't work out, I deploy my capital that have taken me a long time to earn, and I deploy it elsewhere. Anyway, hope you found this video useful. Don't forget to check out my marketplace called Deep Value Returns on Seeking Alpha, and you're welcome to do a totally free trial, I got a 14-day free trial, so if you cancel anytime before the 14 days, no harm, no foul. You come in, you check it out, at least you know that you tried your best, because not trying, that's really bad. So you got to go in and try it and figure it out if this is for you. So, and if you like it, you stick around, and if you don't, at least, you can say, oh, I like this investment, and I'm kind of enjoying just picking out my own stocks, and I don't really want to get involved. But if you come in, you can say, okay, 1 or 2 ideas a month are quite helpful for me. So anyway, I'll see you soon.